Hey guys, so per usual, everything on this channel is for educational purposes only and is not intended as financial advice. So it's been a while since I did a Bitcoin video. This is going to be a big video. Let's take a look. Let's break down the rally. I'm going to review some stuff I talked about in my last video, talk about the tweets, talk about why I thought we were going to pull back when we did. So let's get started. Here is a previous chart that got a lot of traction on social media because it was projecting, this pretty insane $1,300 level zone up here. If you haven't seen this before, so this is a pitchfork. What I was doing was comparing the consolidation period of the lower quartile here to the current consolidation or, previous consolidation at this point in time. So they actually turned out to be about the same 35 days before we broke the quartile upwards. So I'll look for that in the future as well. Something else to note, the RSI hasn't double topped yet, but I fully expect it to at some point. When it does, that's definitely a get out of your longs signal. Another thing that's kind of weird is volume is super low. I don't know if that's just because of post-halving volume, because no one's using Stamp. I'm pretty sure Coinbase and Circle still purchase some of their coins through Stamp, so I don't really know what that's about exactly. So that's interesting, and that's going to be a common theme throughout the video. Volume generally is still really low. So that says either an increase in volume can take us much higher, which is what I'm hoping for, or that volume just won't get as high as it did in the past for a variety of reasons. So per usual, when I start looking at charts, I always start the highest time frame. This is the weekly. Again, volume comparatively on the weekly is lower than the last huge breakout, lower than almost everything, really. It's almost equal to the consolidation of the ascending triangle, which may say we're going much higher. I don't know. This could be one of these four candles here. So if we're comparing the volume of this move to the volume of this move, we may get 4 more weeks of just insanity, bullish rally upward. I'm hoping for that. I don't know. We'll see. But again, we're above the cloud, above the Kijun, Tenkan, sorry. We had the TK cross back here. Something that I'll say in every video from now till we hit it, this 465 level, we will hit this zone eventually. You may think I'm crazy. That's fine. People thought I was crazy when I was talking about 620 when we were down in the 200s, okay? It's the same principle. Flat Kumo equals magnet. Whether it be a black swan event, whether it just be a massive pullback after the bull rally to 1300, there's going to be something, and that's going to be the zone. That's kind of like the key level. As you can see, 465 was the top of the ascending triangle. It's also the bottom of the super bubble. So 465, for whatever reason, doesn't matter what it is, seems to be like the make or break bull versus bear trend sort of level. Here are the 50 and 200 EMAs on the weekly, and you can see that back in August was the last time we touched the 200 on the weekly, which is both excellent as far as the bull rally is concerned and a little concerning considering we're going to have to touch it eventually. We've tapped the 50 on the weekly on the Bitfinex hack, so that was good as far as bouncing from somewhere or testing certain levels, however you want to say that. That's the general idea when I'm looking at these zones. Here's the daily 50-200. In the last video I was talking about how we were hugging the 50, and that was bullish because that's saying we're above previous zones on the EMA. That's certainly not bearish. We weren't, you know, in between, which is sort of indeterminate. We were definitely still in bull trend territory. So sure enough, we broke up from that, obviously. And again, we tapped the 200 on the daily at the Bitfinex hack, which is good as far as just testing levels are concerned, testing support. Obviously, it sucked on that day, but whatever. This is something I tweeted. This is a weekly RSI with just candles, and something that I'll bring up again later on Twitter. But you know, when you see this, I'm always worried about how can I lose money. Okay, that's the bottom line. Obviously, I know it's a bull trend. I'm bullish in general, okay, but the question is, how can I lose money? And one of the ways I can lose money is not paying attention to certain things like bear divs, okay? If this goes higher, which I think it will, and RSI does not follow suit, relative strength index, that suggests to me that there is going to be a strong pullback, and I need to consider dumping leverage longs as well as dumping spot longs, okay? That means being out of coin and in cash. So that's something I'm concerned about. Not on here is volume, which would also show a div almost guaranteed, because we have no volume relatively compared to this craziness on those couple weeks in that month. Back to daily Bitstamp, just looking at the chart naked, I don't see anything specifically that's pointing out to me, sticking out to me as far as patterns or any candles. Something that definitely everyone should see is this horizontal zone. We broke it, so that's good. I talked about that for a couple of weeks. Everyone's going to be looking at that zone, filling the gap basically. Okay, so Bitfinex never happened at this point as far as price is concerned. And you can see we stayed in this zone for 4 days, and we eventually broke out of it, but it was resistance. So again, this isn't just mumbo jumbo voodoo, okay? Another reason that was a zone is because any point of a triangle is always a horizontal level. I've talked about that a ton of times. Again, volume, nothing. One thing you might want to consider, the rally and the trend. So generally it's like, we get a bump in price, consolidation, bump in price, consolidation, bump in price, consolidation, okay? Now usually that speeds up. By speeds up, I mean it gets quicker and quicker. You can see it took several days of consolidation before I moved, and then fewer days of consolidation before I moved, and fewer days, and so on and so on. So as that gets faster and faster, that signals that the rally is coming to an end generally. So I would much rather consolidate here for a week, okay, than keep going, because we just peter out. The moving averages have to catch up. The buyers and sellers need to just relax. Otherwise, everyone's just going to be manic and euphoric and buying and selling and dumping and pumping. And we just need to chill out for a little while. Obviously, in 2015, I think 2014, when the crazy bubble happened, that story is a little different. But that's just something to watch for in the future. You'll see that on any market, any time frame. LTC is a great example of that. If you're not convinced that this is a strong trend, you can pop on Heikin-Ashi. I talked about this in another video if you have no idea what these are. But you can see each successive candle has opened above the previous, and almost each successive candle has closed above the previous. So it says this is super strong. You can see this candle closed below the previous close. It's below the previous wick. I don't really know how to read that on Heikin-Ashi, but it signals there's some sort of weakness. Here's another example of that. You can see everything's higher than the previous, okay? Closes are higher than the previous closes, opens are higher than the previous opens, until we get to here, and that suggests weakness, and then after that, the pullback happens. So nothing on here suggests to me that this is over, for sure. Definitely weakening momentum, and I'll talk about that again. If we go to daily cloud, again, we had the Kumo breakout in here, which I talked about in the last video. I talked about continuation versus reversal. We did get a small pullback, and from there it kept going. So the ascending triangle that was in here didn't complete upward. It did pull back to a level that I mentioned based on the hourly cloud in that video, but then we bounced from there, moving higher. So something to watch for now is the C-clamp, where the TK lines basically flatten out, and you'll see price sort of flatten out as well, and that suggests a pullback versus continuation, or reversal versus continuation. So it tells you don't open a long up here, consider closing your longs up here, and if you're brave enough, open a short up here. I never short a rally ever. It's just not worth it. You make more money buying and holding on the bottom of the rally or in the middle of the rally than you will getting lucky and shorting the top. Okay, don't be that guy, and you're just going to lose more money than it's worth, I think, for most people. Here's everything put together. I have the pitchfork, cloud, inverted head and shoulders, and yearly pivot. So again, at least last video or a few videos ago, we were talking about inverted head and shoulders, the target somewhere around 730, 750, 760. There's a ton of resistance confluence up here. There's the horizontal from the previous zone. There's the median line from the pitchfork. And there's also the general measured move target from the inverted head and shoulders. So we haven't quite hit that yet, but it's around that level. We've also hit the yearly pivot almost exactly. And again, why do I care about the yearly pivots? Because they're not just arbitrary. You can see we consolidated at the yearly pivot exactly here. We consolidated at it exactly here. Okay, so that says it's a relevant level. These numbers mean something. They aren't just arbitrary. And again, that confirms it here because we bounced down from that. 700 is a bit of a psychological level. Any flat number, 700, 750, 600, those numbers, for whatever reason, I'm sure there's reading on this, but you can think of it as just a general horizontal zone where people buy or sell. Again, this is, I'm talking about volume, pitchfork. You've probably seen this already, but this is the general target just based on the pitchfork principles. Everything about the pitchfork is returning to the median line of the pitchfork. This pitchfork, just like the yearly pivots, is relevant and means something because all these zones have generally been respected, okay, all the way back since 2015. So that's why I even care about the pitchfork at all. That's why I can feel comfortable projecting a zone of 760-ish for the move. And again, I'm commenting on volume. This was from October 26th, so it's a few days old at this point. One interesting thing I noticed, I labeled it as no man's land, where basically price either zooms through or is definitely support or definitely resistance. So interestingly enough, we did consolidate here for 2 days, 3 days, and it did zoom through. So whether or not it's still a no man's land, I don't know. But the point is that this zone is definitely, has been so far, either support or resistance, not both. Currently it's looking like support, which is a good thing, meaning this should go higher. You'll notice the yearly pivot is a little different on quarterly futures than it is on stamp, somewhere around 815-ish. Something else to pay attention to on here is the fib extensions. 785 is the fib extension of the entire move from this candle, basically, up to here. So whether or not that's a level worth paying attention to, I don't know. But again, this is all just telling me there's a ton of resistance up here. The probability of continuation is much lower than the probability of sideways or pullback. So be careful opening a long up here, with the euphoria on the hopium. Certainly throughout November, December, I expect it to go higher, but right this moment, I definitely don't expect it to just keep going, $50 at a time, okay? So I always post these charts early, and I always get crap for it because people either are too euphoric or they just don't want to believe it, or what. But it's almost always the same. I posted these charts almost every rally for every market on any time frame. Okay, I like the hourly, like I've said before. I like watching trends on the hourly. I feel like I get the most bang for my buck and the highest signal to noise ratio as far as when to make a trade, where to put my bids, where to put my asks, where to pay attention to pullback versus continuation. So I haven't done a 3-drive video. But basically, 3 drives is just like it sounds. The price moves up three like measured moves, and then it pulls back. Or if it's a bullish 3-drive, it moves down 3 measured moves and then bounces up. So this is me building the bear case. I'm saying, look, there's 3 drives already. We've had 3 drives. Why is it 3 instead of 4 or 5? It just usually is 3. Bitcoin likes to make a 4th drive that's sort of diminutive and sad looking. But for whatever reason, I always make these 3 drive charts, and then there's always a 4th drive. So I don't know. The other thing, there was a growing bear div. Now, this is saying as price is going higher and higher, we're making successive highs. I'm looking at the relative strength index. It's telling me the bull momentum is getting weaker and weaker. I don't have volume on here, but volume was getting lower and lower as well. So again, that tells me what is the probability of continuation versus pullback. Does it tell you that this will keep going? My answer would be no. This tells me the steam is running out of this rocket ship, okay? This hourly rocket ship, and we're probably going to either go sideways or pull back. If I'm in a leverage long, I want to consider closing. If I'm in a high leverage long, I definitely want to consider closing. Now, because of what I said already on spot, being in coin is fine. I'm always in coin, so that's whatever. But just on lower time frames, it's definitely suggesting a stop or slow down. Okay. The other thing, the fib extension. The reason I drew the fib extension, or the fib like I did, I'm taking the TK across, which is basically the confirmation that this is going to continue in the bull, in this case, because it's above the cloud. I just then matched it with this 50% Kijun, and lo and behold, the fib extension, we've hit the fib extension already, okay? Also, again, it's a psychological zone, 700. Lastly, I mentioned approaching yearly pivot, and that's right here, around 712, okay? So all of these reasons, plus the TK cross, when this gets close, that usually says something's going to happen. Either we're going to continue up, so you can see we get a cross here, or it's going to pull back. So if I follow that through with an hourly pitchfork, again, it's approaching the top of the pitchfork, it's approaching the yearly pivot, bear div for sure. This tells me pullback versus continuation. Following it through, again, it hits the yearly pivot. Same story. I'm thinking I would not long up here. Why would people long up here? We're getting all these wicks, yada yada. Lo and behold, we pull back. Okay, it definitely wants to go higher. You can see that it attempted to. This isn't a shooting star candle per se, but it did not break the yearly pivot cleanly. That's for certain. It also didn't break the pitchfork upper limit cleanly. Okay, it says it's gonna stay within the boundaries of the pitchfork. It's gonna stay below the yearly pivot, just like I was talking about here, and that's what happened. So it's not a surprise that we're getting a pullback now. And this was, so when I'm on the hourly and I'm thinking we're getting a pullback, I move down lower to lower time frames. And again, I'm seeing this 3 drive fractal lower on the RSI, so bear div, and I tweeted out, what do you guys think? Is this bullish or bearish? Just because it's easier, if you're learning, at least if I'm learning, I don't want somebody to spoon feed me everything. I want to look at it and say what's going on, be analytical and have some critical thinking of my own. So, this is what happened, and this is what I was thinking and talking about tweezer top on these two candles here. You can see the second wick was not higher than the previous wick. We had a gravestone doji, which is, it looks just like this, all the way down, and it's red, coupled with a hanging man doji, which is basically an inverted hammer, or just a regular hammer, however you want to think about that. Then we had another attempt at breaking that zone, and it failed. I closed my leverage longs at 7:50 EST PM. So somewhere in here, I think. Somewhere in here. So anyway, the point is, I was right, but the chart was telling you what was going to happen the whole time, just based on probability, continuation versus reversal. And that's what you have to be thinking the whole time. You have to keep the emotions out of it. Look at, how can I lose the most money? Does this look weak? Does this look like it'll keep going? And then a secondary thing, we bounced on the yearly pivot, which is great. And we also bottomed out on the RSI. This is only on 15 minutes, so this could go lower. I don't know. But again, stay in spot, get out of leverage longs. So that's all I have for today, guys. Like, dislike, comment, share, subscribe. Let me know. Talk to me on Twitter and Telegram. Happy trading. See you at 1300.